The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 15, NASDAQ off 8, S&P's down 6. This hour is called the Bull Bear Bull Bear Trading Hour. And guess what, folks? It's been applicable in a huge way for the last 2 weeks because the bulls are trying to bring it higher, the bears are trying to bring it down, and we've been getting a flat market. Gold contract up $1.20, trading $12.85. We have silver flat, $15.09. Light sweet crude down 64 cents. That build came in big last night. Yeah. We'll see whether it follows through. $55.90. ExxonMobil's getting smoked. That has to do with they're going to be spending big money. It's down $2, trading $77.99. Notes and bonds, guess what?
What?
Ever-ready money, man. They just continue to want higher price, lower yield. 10-year up 4 ticks, 122 even. 30-year up 10, 144.23. And King Dollar. You talk about a battle. King Dollar got over the highs of yesterday. Spike high this morning at 8:30. Those spike highs I kind of like. Failed. Up, down 40 ticks right now, 96.755. Euros trading at a price point of 113 to 1 US dollar. The yen is at 111.72, and the pound is at 131.73. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do each and every Tuesday, Wednesday, Thursday. Get us straightened out in these markets. And folks, if you'd like to understand the option market, option strategies, upside down, as well as the future market, every trading day right here, 11 to 12 Eastern Standard Time. Kevin, Tom, great program. If you haven't test-driven yet, the Thinkorswim platform, it's real easy to do. As you're at TFNN, just hit the banner, bring it up. They'll allow you to trade with paper money as Kevin and his team go through these different strategies each and every day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Another day. You know, here's what we're doing, guys. We're going through a lot of earnings in retailers, right, that are coming in, hit some hits and some misses. It's really a stock picker's market when it comes to these retailers. But the private payroll number was good today, in line, in 180,000 range. And then we're waiting for two things are coming up in the next 2 days. Costco's earnings will be big.
Yes.
Right? That's a big one tomorrow after the bell. And then Friday morning payroll. Right? That's the biggest data point of the month. And then next week, we have as many as 5 big important data points. So once we get to the end of Thursday, this market's going to start picking up with a bunch of really significant economic data. Right now, you're right, Tom. It's a battle between bulls and bears. I mean, futures are soft, but they don't seem like they want to go down much further than this. I think they're kind of drifting, waiting for some real direction here.
No, there's no doubt, man. I mean, and we know that the longer that they lay here, I mean, we're almost 2.5 weeks at the same spot.
Yes.
Within 20 handles. I mean, but that's nothing, folks. When you're trading it at a price level of 27.85. I mean, that's a blurb can go in 2 seconds. You know, it's going to be interesting. When I look at China, Kevin, right? China looks to me like it's off the bottom and strong, right? And that's pretty cool because what I'm looking at, I'm saying to myself, okay, it's real possible that we already went through the downdraft the last year and a half. Do you know what I'm saying? And then we didn't get hit as bad as, Europe did and China did. And it's like, okay, so are we making it back up again? It's going to be really intriguing seeing if that's the case. What worries me a little is that it seems like when the earnings number coming out, it's not the earnings number that what they just announced that is hurting stocks. It's the one saying going forward, the first quarter. Do you know what I mean? But it's possible that, we just went through this slower period and we get on the road again,
Right. It's one of those things. It's, guidance, we have to admit, has been very tepid.
Yes.
Right? Some people are really unwilling to say how positive this is and their views going forward. They're being very cautious in terms of going forward. That's not the worst thing in the world. But that being said, a lot of these numbers, everyone's got to think about where we were, the January numbers that come out in February, think where we were at the end of December and what was happening. That affected some of those confidence numbers and things like that. But now, what this market has done through January and February, now that data is starting to hit this market, and some of the confidence, some of the manufacturing numbers, they're all starting to tick up and go higher than expected. So these are all things but it's still going to be guidance, right? How these guys guide to the future, and then how these stocks react. Everyone looks at this market and says we've come a long way, right? But we're still not to highs. We're close. We're getting there, but we're still not to highs yet. But so this market is really becoming a two-way trade here.
Sure. And, when we look at it, we've been in a consolidation, going all the way back to January 2018,
Right.
And the cool thing is, folks, okay, if that's where we're at, it's going to be a monster consolidation, which is great. I mean, if you're a trader, you could, it's like, I always like trading the oil sector because for some reason the oil sector loves doing large consolidations, meaning the equities inside and when you get a large consolidation, your probability of doing well is a lot better. You're not going to get the top, you're not going to get the bottom, but that nice fat piece in the middle is pretty cool.
Sure.
Oh, there's a lot. Tom, there's a lot of money to be made in between the highs and in between the lows. That's where most traders spend most of their time.
Yes, there's no doubt. So, what are we going to be talking about today, Kev?
It's a little light on earnings today. Kroger will be a good name, another retailer and a grocery store, a massive grocery store, make no mistake. And then, we're going to start looking at Costco, getting ready for the payroll number on Friday. And then we'll look at, everything that's moving. That's what Tom and I go through. We try to make our decision as late as possible so we can focus on what's moving right at that time. Right? And we wait till the last possible minute so we can really cover that's trading right now.
How cool is that?
That's what we try to focus that show on.
Yeah.
Current events.
Right.
Kevin, when we look at Kroger, I mean, it's amazing that, you have a grocery store. They did $108 billion in 2015. This year, $121 billion. It's like, wow.
They are massive.
They are massive.
And, people think, remember, they got killed about a year and a half ago when Amazon bought Whole Foods.
Right.
Remember, they came out, they missed their earnings one day, and then that got announced the same day, and this stock got annihilated, and it's basically, made a great comeback since then. But this is still a sector that people want to see the numbers. You got to show me, because there's going to be winners and losers, right? And Amazon keeps throwing missiles into the pile with everything that they're announcing. So, this industry is still going through some changes, massive. Yeah. And so the final jury is still not out on the grocery sector. So you've got, Target in there, you've got Walmart in there, you've got Amazon in there, but Kroger, make no mistake, is a massive grocer.
Yeah. You think Amazon's aware that they're pulling in $120 billion in revenue in groceries?
Sure. And, of course, Amazon has the technology.
That's it. That is quite a number.
As we keep going forward, this technology, man, is so important as to, it's eliminating cost.
Yes.
That's the bottom line.
Yeah.
Kevin, you have a great day, safe day. Look forward to the program, 45 minutes.
Thanks for having me on, guys.
Thanks, Kevin.
Thank you. Stay right there, folks. Tommy and I are coming right back. We have the Dow down 17, NASDAQ off 12, S&P's down 7. Come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now down 30. You get the Nasdaq off 18. S&Ps are off 9.5. If we go take a look at those S&Ps for a second, folks, my take is that we're going to go down to, I think it's the lows of Monday. Kind of sticking out like a sore thumb.
Okay.
Inside the intraday.
I was going to say, we're basically right in the middle, because I kept doing the updates yesterday, and I said, just for context, right, we're right in the middle, basically, Monday's decline, and we're kind of like, I guess we're near the lower end for sure, but we're still kind of...
So what we did, this is crazy when this happens, right? Oh, that was the low anyway. Oh, yeah. So we got down to 27.81, and we just...
That's the low from like last night.
Okay. Yeah. So this is way too much volume here, folks, as we're going into that low of last night. Now, that makes sense because you're in the middle of the night, but bottom line, it is what it is, meaning volume-wise. So that's going to be a crucial number. Of course, that low, 27.81. You break that, you're going to be down to this... 27.67 in about a heartbeat, because there's just nothing sitting there. So it's going to be kind of cool watching this whole thing shake out.
Yeah.
And it just might be the oil numbers.
We'll see what happens, right?
Because what we've seen, you know, when you look at the NDX 100, you see Micron's going south, which, you know, every time that I look at the NDX, if you get these chip stocks starting going south, you really better watch the composite.
Yeah.
Because NVDA, because it seems that they can lift it up and lift it down about a heartbeat. You know, NVDA is not bad. It's not $2, you know. Okay, so let's look at some oil. We got the oil numbers coming out.
We sure do. I was trying to see if I could click back to that story, but that's all right. Okay, so it's 10:20. We get the EIA inventory numbers at 10:30, of course. So we got crude trading 55.58. So API number last night, there's your last night action. We were trading at about 56.50 coming into that number.
Yeah.
It showed an increase of 7.9, I think, million barrels. Yeah. So with that in mind, of course, oil trading lower. We're down about $1 from that level, 55.58. Jumping around to some of the spread contracts, if we're looking for a volatility trade, the ones that expire at 11 a.m., just pulled them up. So we'd have $56 we could use, or you could use 55.25, all right? We're still...
Where are we at now? 56.50.
55.58.
55.50, okay.
So we're about 30 cents, 35 cents, give or take, away from that. I'm just going to jump around to see if, you know, ideally, closest one's going to be 55.50, right? That might line up if oil may have been in that context. The noons are going to have the same exact price spread, okay? And the 230s are going to have even a bigger, because the dailies, they open up 56 would be our option. So let's just line it up for the 11s. And 55.25. Okay. Now, what's going to happen here is that you're really going to have a pretty dramatic bullish bias, because this is going to demonstrate it right here. You're getting in at 55.56. The bullish leg of this trade is going to be $41, representing 41 cents that you're paying above the floor.
Yeah.
And let's just demonstrate how cheap the bearish one, if you do just still want exposure to the bearish side. This one going from 55.25 down, and you're getting it at about 8. Right, so in theory, it's a bullish spread with almost exposure on the downside if you happen to get a dramatic move in that direction as well. And you could always take both sides of this trade. I bring it up occasionally. Maybe you're just bullish.
Yep. And
you want defined risk. Not a bad opportunity. Market's trading at 55.60. You're paying 5 pennies to get in at 55.65. And you're risking 4 to make 10. You know, you're getting 2 to 1, 2.5 to 1 on your money.
For 30 minutes, right.
Yeah, for 30 minutes, and perfect. Let's see how, so we'll leave those up even, and we'll jump to the noons, because we do like going the noons. And let's just pull up that bullish one, 55.25. Here's your noon. Look at it, so it's such a small, so now the market's moving. We're trading now 55.54, so you're paying about 12, 11, 12, 13 pennies, give or take. But again,
still.
Yeah.
Yeah.
I mean, you're almost getting 3 to 1. You're getting 2.75 to 1.
No, if you were bullish, that's a good trade.
It is.
That's.
I would agree.
You talk about defined risk.
I would agree.
That's pretty intense, actually.
Yeah. So we'll see where that number shakes out. 1023. API, big surprise last night with the build.
Let me pull this baby up. So, crude right now is down 1.5%.
Yeah.
And. Okay, so let's see what we got here. You got, you can see that last high was last Thursday. I got to what, 57.88. Tried to test that yesterday with 530,000 contracts versus 684. So, I mean, it looks like this thing wants to try to trade down to 55.08. You know, that's the last time. It's a consolidation. You know, I mean, we're in so many consolidations, folks, in this market. It's like, you know, wild. You can take these different structures, and in this particular case, you're going to see that, you know, November 13th is the time frame there. I mean, that bar is vicious, man. Well, I got to, look at that. I forgot that this happened. You know what, we were probably not in this contract, but on November 13th, folks, that was a $4.50 move in the oil market.
Yeah.
$60.11 to 55.58. That is one monster move, man. Hey, we'll see. And where oil does go, folks, that's where the correlation has been pretty direct. Meaning that if oil has gone down, you know, the market goes south with it. As we were just talking about this, let's go see. It looks like the market is going to go make a run now for this number that we were just talking about a few minutes ago. We just broke that 81, and we'll see if we get any juice behind it. You know, you had a little spike down, got to 80, no big deal there. Dow Industrials, let's go take a look. The strength versus the weakness inside the Dow Industrials. And strength is that's Dow DuPont, that's up 1.7%. McDonald's is up 0.6. Taken away from it, ExxonMobil down 2.2, Pfizer's down 2, you got Walgreens down 2, United Health's down 1.68. And if we do go over...
What's going on with ExxonMobil?
Oh, look at this, man. They're just spending money, and Wall Street doesn't like it. So...
There you go, right up top, So they raised their spending target to heights not seen since the historic oil market collapse began in 2014. That's not a good sign, eerie for investors, I'm sure. Bucking the cost-cutting trend among rival energy explorers. So shares dropping. So their annual capital outlays will average $32 billion through the end of next year.
$32 billion.
And that's not what they're spending. That's just their capital outlay.
Yeah.
A 24% increase from just 2018. Wow.
But guess what, folks? When you're in the exploration business, you got to spend money to find more oil.
Yeah, and that's what their CEO said. You know, in a presentation of his long-term vision to analysts. It's got to be a long-term vision when you're spending $32 billion on capital. Society needs us to, society, okay. Woods told the gathering, the world needs us to spend this $32 billion. Otherwise, how will we survive? ExxonMobil, perhaps the biggest risk to the industry today is underinvestment. So, the truth lies somewhere in between, and we'll see if that investment pays dividends. But investors are a little wary.
Yeah, they are. They are. And, so the low for the year in Exxon, 64, the high's 87. They still pay a 4% dividend at this price. That's pretty intense for, an oil company.
Anytime anybody tells you that society needs them, just be a little wary. Because that's quite a statement.
You need me.
Yeah, society needs me.
You have to buy everything I have right now.
The world needs my presence.
Right now.
That's a little worrisome.
Stay right there, folks. Tommy and I are going to be coming back with these oil numbers. We have the Dow Industrials down 34, Nasdaq's off 30, S&P's are down 10. Coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, crude plus 7 million barrels.
That's a big number. So even Bloomberg users looking for a build of about 1.3. That had been the estimate. API did show a number even above 7 last night. That's a big build. How far do you think it's going to drop? Ready? Here we go. Oh, look at that. It pops. That has to be frustrating if you are
That's the
short.
market. I know, man.
You get a 7 million barrel build, and crude pops 25, 30 cents on the first pop. And we'll see. You know, you'd have till 11 o'clock, 12 o'clock. That's the beauty of defined risk if you are wrong on one of those.
Yep.
The bullish trade would have been a nice trade when you're only paying, you know, whether it was 11, 12 pennies, right, over market. So you'd be profitable still with your risk capped at that 55.25 price limit.
Right.
And let's just jump back even one more time. So there's your number.
Okay.
Crude, 7 million barrel build. Median estimate.
Look at that.
Yeah, was 1.4. We saw Bloomberg survey was even about 1.3. Gasoline, quite a miss to the downside. A draw of 4.2 versus an estimate decline of 1.6.
That's impressive, particularly because, you know, when you're talking the whole United States, a lot of people have bad weather, snow, you'd be driving less. Well, that's showing that we're still using a lot of gasoline. Yeah.
So quite a number, man, in terms of across the board headline number on crude, and just to see if it's holding it, it's holding it. We're at that high. So 55.82. That'll be interesting to see what that holds after.
I know.
You don't often see such a quick spike in the opposite direction.
No.
You might see a move in the opposite direction when it plays out, when they dig a little deeper into those numbers, because there's a lot contained in there. But usually, this dictates the first reaction in the first 15, 30 seconds. And that does not make sense. But hey, there's a lot going on in that market. And I think a lot of people might have been saying API was a big number last night. You know what? That was the estimate number, but that has changed. The only thing that gave me pause on that was that the Bloomberg user survey came in so close to it, because that's something that they allow input on up to, I believe, about 10 minutes before the report.
Right.
So somehow the market was looking for it, but not the traders, because man, oh man. And we're back to 55.72. Okay, we'll check back in.
And
we'll see what. Go ahead.
You know, in the S&P, as we're doing that, the S&P is saying that.
I wasn't even paying attention.
What?
There we go.
The bottom line is that this oil number, you know, is not looking to hold. So we'll see. You know, you broke down underneath that 27.80 with 27.77, and you know, bottom line is there's not much here to stop it. You know, the battle line now will be that, you know, like 27.72 to 27.67.
5 to 10 points below where we're at. And, and when you pull this up, it's ticking fast, like 1 to 2 points, which is a big. It's trying to find its supply and demand.
And what happens, folks? Now this is what's really cool, depending on how long you've been in the marketplace. When you have a long consolidation like we have, right? What seems to happen is that you go a little, and this is on the way up or the way down, right? And then all of a sudden, bang, someone hits it. They hit it. If you're going up, they blast it through. If you're going down, that's the other side of it. You know, they're taking the shot that, okay, we're going to get this thing going, you know, because, of course, traders want to get it going in a wide price spread.
And I just wanted to bring the NASDAQ 100 over here.
Is that the NASDAQ?
This is quite an acceleration now. So 9 o'clock this morning, we're up there at 71.66. We're now 44 points below that level. And yeah, this bar right at that 10:30 mark, 15-point bar.
Yeah, the NQs, man, are mind-blowers. There's no doubt. Look at that. Yeah, and so that's the number.
You just pulled up the S&P. Is that what you're trying to do?
Oh, I did. No, I didn't. NQH. Okay, so here we're talking. That number is, so look at that, 774. So you're talking another 45 points if that's where it's going to go.
Yeah.
And there's not much, well, actually, what you want to look at, let me get this closer, so I'll do it 3 days, because you want to look at the highs of that low bar also, because that should get a little support right there. See, that bar was so big. 71.11. 71.11.
Only 9 points away from there.
Yeah. Look how big that bar was. That's at 12 o'clock, folks. We went from 71.11 to 70.75 in 10 minutes. So when we come down to that 71.11, it's going to be important to, you know, gauge what that 10-minute is doing right now.
Yeah. I'm just going to even. This is Monday. I was just zooming in so you could really. Yeah. What bar was we were looking at? This one? Yeah.
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 Yeah. It's a big number.
It is a big number.
You know?
It's a 36-point bar.
Right.
These are 10-minute bars, correct?
Yes.
Yeah. 36 points is 0.5% in the whole index in 10 minutes, right? Yeah. It just doesn't look as dramatic because the fall was so dramatic in terms of, I mean, this one, if you look at 72.06, because I was looking at this to under 7,100. Come on, pop up. 7,078. So you're talking about 100 and 25 points.
Right. Right.
It's almost a full 2%.
And that's at $20 a point, folks, per contract.
Yeah.
Okay, so pretty intense.
Let's check back oil. I'm curious. Uh-oh, we're back to almost where we were, 55.65. I think they're waking up to that. That is a big number.
That's a big number.
And we'll see.
Pretty interesting.
Definitely.
Gold, dollar. So check this out, folks. This is going to be kind of cool. Like, we had a spike high at 8:30 this morning in the dollar, DXH. And what I've seen with spike highs is that they're pretty good turning points in the marketplace. Because what large traders that really do control the market to a certain point, what they're trying to do is find out if there are other orders on top of it. And this was pretty dramatic, okay? So 8:30, and that's where the dollar index opens, by the way, also, okay?
And that was the payroll number to be. That put some big volatility.
Yeah. So bottom line is you get the spike. The spike goes from 96,815 to 96,940, and then gives it up.
Yeah.
That's a really cool thing. So we'll see if we get the turn out here today. You know what I mean? And it did get over the highs of yesterday.
I wanted to put it. Let's see what it did on a minute basis in that. Because I'm just curious as to if it was the first minute or how it.
Right.
If it took. So what bar is that? Right at 8:30. 8:31. Yeah. And by 8:34, it was almost back, and then really by 8:45, it was back to that level.
Yeah.
Yeah.
So it's going to be a big one because what we already have is that we had the 31,000 contracts on Friday. You had the contraction on Monday down to 16,000. Yesterday was 14,000. Today you got above it. Now today we're going to do more than 14,000. We'll do a good 20,000 or something. Well, maybe 15, 16. Bottom line is though, thus far you got a failure out here. You know, it has to close 96,950. That's how it would have to close over. So, bulls and bears, they're out there fighting right at that level also.
Yeah.
And gold, let's go over to the gold contract. The gold's trying to pick its head up. It's going to need more than it has thus far. You know, we've had a spread out here today. 1291 has been the pop. Let's see. Yeah, that's a nice deal. It's saying that it's going to try to worm its way up into those highs, and we'll see what gold's going to need right now, folks. I think is some news from the UK. Do you know what I mean? That the pound can get some real action going, you know, because the pound out here this morning is kind of flat, 131. Well, you know what's really cool? We get to talk with Teddy Cakestack today, too.
Yeah, we're talking currencies. Forex.
Yeah, Forex.
Next segment.
The next segment. That's a beautiful thing.
It is.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials down 83. NASDAQ off 45. S&P's down 14.5. Come right back. If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 80, Nasdaq's up 43, S&P's down 13.5. Let's go over to our man, Mr. Teddy Cakestat, as we do each and every Wednesday at 40 past the hour. You can reach Teddy every trading day at forex-trading-unlocked.com. And bottom line, folks, is that we're laying at these levels and have been laying at these levels, man, for a long time. Teddy Cakestat, what's going on, brother?
Good morning, guys.
How you doing?
Good morning, Teddy.
Pretty crazy. We got the dollar was pretty strong this morning, coming back a little bit since the stock market opened. So, but the pound and the Canada and the Australian dollar are definitely giving the dollar a surge today.
Yeah, you know, I guess, and when I look at the pound, like that's a normal pullback, I guess, for, you know, we've had a couple signs of strength, man. But what I'd like you to do is get on the telephone, man, and tell people start buying that pound so the dollar will crash.
Well, the Swiss is doing the parity dance, so the dollar right now seems to be holding its strength right now. I don't think, you know, no matter what, we've been talking about this for weeks now, it seems that the dollar, no matter what, it's holding strong with the news and with the way the interest rates are going.
Yes.
And I was actually down by the Board of Trade yesterday talking to some guys, and it seems like with the rollover now, it's really tough to trade the interest rates, and looking how the currencies are going, I think we're going to see a lot of neutral trading. Like the euro and the euro-US dollar trade's been in basically a $2 range now for months.
Okay.
You know, so, and nobody sees that even remotely changing. You know, especially with the Brexit thing and the way the EU looks like right now with their economic numbers. Now, there is a sleeping catalyst that could change things, and that is the Turkish lira. With right now, with what's going on with them with Syria and with our U.S. potential military issues, if we start to put on sanctions or make some kinds of moves, the Turkish lira could take a dive, and that could actually start to cause some instability and also affect the euro as well.
Interesting, yeah. So you know, this yen, man, this yen just is, I mean, well, it's weak, rather, but it seems like it's loving this 111 point, man, you know?
It is. It just keeps on trying to butt up against this 112 even area. It doesn't seem to want to hold above it, which is a pretty key psychological area.
Yeah. Because I'm actually surprised that the dollar is actually not up more. You know, this morning we had that spike, but because, like, once it starts with 111, it's like, well, you want 114 again? What do you want here? Do you know what I mean?
Yeah.
It's like...
Right. Well, that's the one thing that's interesting about the dollar strength right now, especially over the past couple days. You're not, I mean, except for the pound, you're not getting it from your major, you know, pieces of the pie. You're getting it from more of your outlying currencies, like the Australian dollar is just getting smashed.
Yes.
You know.
Yes.
Canadian dollar is just railing like a balloon underwater, you know. So the pound, relatively, this pullback is kind of I wouldn't say it's indicative of what's going on with the dollar. It's more of just a little bit of a profit-taking break, you know? So, and I think that one of the things, like especially like I mentioned, the Turkish lira, you have this situation with Syria, and now you also have the turnover of power in Mexico, too, to the what is his name? Lopez Obrador, I believe.
Okay.
Now, that could be a threat to NAFTA and totally change the peso-dollar trade. Most people, we don't talk about the peso usually very often, but up until this point, we were looking at NAFTA being resolved between Canada, Mexico, and the United States in amicable agreement that definitely is better than what was in place before. And it was also something that was good to keep the peso relatively stable, where it's been trading around basically 17 to 22 pesos to the dollar for years now, in that kind of a range, which is seems to be pretty healthy. It's good for American tourists, that's for sure.
Yes.
You know,
we never get into this, but Teddy, how did you get in the foreign currency business?
How did I get in the foreign currency business? It really started as being a bond trader and an interest rate trader, and I used to be. I didn't trade the futures because of the liquidity issues, especially with overnight trades and stuff.
Yes. And
whereas you could trade the night bonds and things like that at the time when I first started trading. And then with the advent of the cash market, once the broker, because originally the cash market was all broker dealers. You had to have a lot of money to participate. No even reasonably sizable retail trader or institutional trader could even touch that market.
Yes.
Once that opened up in 1998, and I saw that you could trade them 24 hours a day, that was, okay, now I didn't have that risk of when the bonds were closed, so I started using the currency cash with the interest rates, and then that's how I got, into
that's
where
so
I'm at.
cool, man.
Nice.
Because it's, folks, what happens if you're interested in the currency market, the way I would do it is to take one currency at a time, because it took me a while to get acclimated to it, you know what I mean? But it's so intriguing, man, because it's almost, what I like about it is it's like a commodity market. You only can go so far down. There are fundamentals in between that. Do you know what I mean?
Yes.
And knowing the currencies are like, wow, man, that's the world we live in, man. And I can imagine, when before the euro came into being, I'd say all those European traders, they had to know currency upside down. It's like you're going from state to state, right? And, you got to know, what's my money worth today, right?
Yes, compared to what,
Absolutely.
right? Yeah.
Sure.
Yeah.
Could you imagine trying to plan your travel when you're going from one country to the next on your vacation?
Exactly. Exactly.
Yeah, you need 15 different.
You're doing well when you're in France, and then you're doing really bad when you're in Italy in the next week.
No, totally. And what's really cool about it, you can see why people can have currency battles too, because if you can have a nice weak currency, you're going to get bigger volume.
Well, now you just hit the nail on the head there, currency battle, and I think that is something that we're going to see come this summertime.
Okay.
Now think about the trade war talks and how they've disengaged the tariffs for now and whatever, and we know that this is going to get hashed out eventually. But one thing that is definitely done, as well as I do, guys, markets correct, and they don't wait for governments and whoever else to make a decision on what they're going to do.
Right.
So, and we've seen, especially over the last 6 to 8 months, an explosion in growth in manufacturing outside of China.
Okay.
We have an explosion of manufacturing in the U.S. where we're relying on things that do come out of Asia that we were getting from China that now we're not getting from China. And there's a double-edged thing happening here. You have the yuan U.S. dollar trade, which nobody really talks about because the yuan is so fixed. However, the fact is that it's the way the dollar has been moving in that relation with that, it's actually hurting the Chinese right now. So their exports are getting more and more expensive.
Okay.
Everyone knows the quality is horrible. And now you have people in this country that are in business that are now, our loss leader and parts problems are no longer as big of an issue with our new suppliers. So do you think that they're going to go back now, if they're getting parts from Vietnam or Taiwan or India, and go back to their Chinese supplier, which was they were losing money on, no matter what the trade deal is?
That's wild. Yeah.
So and if that's the case, it doesn't matter how this trade deal works out. We may be seeing the beginning of where their economy is solely based in-house because the rest of the world has had pretty much enough with the fixed currencies and the bad products, and they know that they keep growing and buying stuff up everywhere else. And it's all on based off of debt and what have you, It's
gonna be wild watching this thing shake up.
Yeah, that's a big one.
Because there's no doubt you never want to lose an order. I mean, if you lose an order and someone else can come in and fill it, and the person's happy with it or the company's happy, it's a problem.
Don't lose them all, that's for sure.
You see what happens, right, guys?
Right.
Teddy, you have a great week, safe week, stay warm. We look forward to speaking to you next Wednesday.
Thank you, guys.
Thanks, Teddy.
Too. Appreciate it.
And folks, you can check out Teddy every trading day, forex-trading-unlock.com. Dow down 56.85, NASDAQ off 44, S&P's down 13. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now down 76. NASDAQ is off 41. S&Ps are down 12. Let's go to Tamar in Seattle. Hey, Tamar, what's going on, brother?
Hey, how you doing, Tom?
Doing great, man.
I just
Yourself?
want to know what you guys take on the movement on NIO and IO today. And I know you guys have been talking about Tesla, and then Tom, you've been talking about the Shanghai index going up. Kind of what your general take on that was. I was maybe eyeing that if it gets down to the 760 level and possibly buying that at that support.
Yeah, so with NIO, you had the news out here was that they're going to scrape the new factory. You know, it looks like, what is it? Chinese vehicle startup NIO canceled a plan to build a second factory in Shanghai after reporting a full year 92% year-over-year increase in net losses to $1.4 billion. So that came out this morning, and, you know, stock opened down. Yesterday we closed at, what, 10.14, yeah. You opened this morning down at 8.11. So if we look at this, well, this is interesting, though. Let me put this on a weekly.
Now, that pop is going back all the way to that 60-minute story that they had dating back a week ago, Sunday removed.
Yeah, so I see what you're looking at tomorrow. I mean, your bottom line, yeah, $7 and what, 21 cents. You know, you get back there with some light volume, then you get a consolidation. But for $7 stock, you might have a consolidation to 1064.
Yeah.
You know, that's how it seems to be setting up. You know, and the Shanghai market here. I'll bring the Shanghai market up for a second, folks. This is a good-looking market, man. I mean, this is going to get interesting, and there are, you know, ETFs that you can trade in the U.S. I wouldn't be buying them right now, but there are ETFs in the U.S. that you can get. You can see this. This is pretty dramatic.
It sure is.
I'd wait. You know, Shanghai's at 3102. I'd wait for like 2804 or something. Do you know what I mean?
Yeah. Tomorrow, thanks so much, man.
I can't believe it went that fast.
That was a quick hour. Lots going on.
Great, we're having a good time. Stay right there, folks. Fast Market coming up next. Have a great one. Have a safe one.
Thanks, man.
Wow! Go get them, folks.